Global markets are approaching a critical inflection point. On December the 1st, 2025, a series of events inside the Federal Reserve, Japanese bond market, and global liquidity systems trigger what many analysts now describe as a monetary regime shift. Not a typical cycle. Today we break down what happened, why it matters, and why major crypto networks like ICP may be positioned to benefit more than most as we move towards 2026. What's your take on this shift? Share your thoughts in the comments. December the 1st marked the moment where the Federal Reserve's tightening path hit an unavoidable structural limit. The Fed's balance sheet, which has been gradually shrinking over the last several years, found the hard floor at 6.58 trillion. Bank reserves stayed at 2.88 trillion. Meanwhile, the reserve repo facility, once a major liquidity absorber, collapsed from 2.5 trillion at its peak to just 6 billion, effectively running dry. The following day, overnight funding rates breached their intended corridor, forcing the Fed yesterday to inject 13.5 billion in emergency overnight repo operations. This isn't a policy pivot. It was a market safeguard. It's argued that this moment confirms that the Federal Reserve cannot meaningfully reduce balance sheet capacity, and liquidity is needed. Because it's without the liquidity, it's destabilizing U.S. funding markets. Do you think the Fed has reached a permanent limit in regards to tightening? Comment below. Japan's historic bond repricing. Simultaneously, Japan has experienced one of the most dramatic yield repricing in modern financial history. We're talking the 30-year JJB yield surging to 3.43%, the 40-year at the long end hitting 3.76%, both at record highs for the country of Japan. The Bank of Japan now carries 32.8 trillion yen in unrealized losses, and for the first time, the central bank's interest expenses exceed its income, and that's problematic. And economists widely even agree that Japan's 3-decade bond bull market is effectively over. A shift with global implications. How do you think Japan's bond stress affects US markets? Post your view below. Because with all that's happening, global liquidity hits all-time highs. We're looking at global M2, which is money supply, has risen to 123 trillion as we speak. US M2 alone is growing at 4.6% annually, and more than 8 trillion now resides in US money market funds. And that's at record historic levels of sidelined liquidity that historically rotates into equities, tech, crypto, and digital assets during easing cycles. So just think about that for a second. This pool of cash that is sitting in money market funds represents one of the largest potential colors for markets in 2026. Do you think this cash will move into crypto once rates fall? Let us know. Think about it. Bitcoin reacts first. Bitcoin acknowledged the liquidity transition before traditional markets did. It dropped to 83,000 on December the 1st. Then rebounded to 93,000 by December the 3rd. It bounced in under 48 hours, $10,000. Historically, Bitcoin has shown an amazing 0.94 correlation with global M2 with a lag of between 60 to 107 days. Usually it's within that sort of 70 to 80 period, but it could be anywhere in between that time period, historically speaking. If liquidity continues expanding at the current pace, as it has over the last 3 days, mathematical elasticity models point to a potential range of 150 to 170,000 between February and April 2026 of next year at this current rate of liquidity growth. Do you believe Bitcoin's late Q1 targets are achievable if liquidity expansion remains at these percentages? Share your prediction below. And market economists are clear. December 2012 signals structural, not cyclical constraints. That's key. Some of the key senior, even macro strategists that I know, that even mentioning the Fed didn't choose to pause QT. The structure of the funding system forced it, and it's evident in the data. The liquidity floor is real and it's visible. When you look at Japan's situation, once Japan's yields broke upwards, global liquidity had to compensate for those rising long-end JJB yields. Japan can no longer anchor the global end of rates the way it used to. So, and regarding also, when you look at the 8 trillion sitting in money market funds, this is not dormant capital. When rates fall, money market balances historically decline sharply as cash rotates back into high growth assets. And what's ICP? It's a high growth asset, innovative technology. So, which expert viewpoint resonates most with you? And tell us below. Altcoin shows strength despite low prices. Across the crypto landscape, we're seeing several networks. We're talking Avalanche, Internet Computer, reporting some of their strongest on-chain metrics ever recorded. And in the altcoin space, I would arguably say that Internet Computer and Avalanche, in regards to on-chain metrics, are probably the best two performers in the altcoin space when we're talking about expanding active user bases, rising application level activity, growing computational throughput. We're talking developer ecosystem growth, increased institutional attention, yet market pricing remains in the yearly lows. This divergence, and it's massive, between fundamentals and valuation is becoming increasingly difficult for anyone to ignore. Do you think altcoin fundamentals have been overlooked? And comment below why ICP's positioning is strengthening. When we look at ICP, it stands out due to the combination of many unique factors. We're talking real-world decentralized compute usage, high developer engagement and ecosystem growth, rising throughput and canister smart contract activity. We're talking independent demand growth outside of speculative cycles. And we're seeing also, which a lot of people are ignoring, strong accumulation from large holders. We're talking humpback whales. So we're talking like the biggest holders that have 100,000 ICP or more. We're talking through the month of November, consistently through that month, humpback whale addresses steadily increased ICP holdings, reinforcing the trend of accumulation heading into 2026. It's all aligned with the macro thesis of the business cycle. These metrics often precede multi-month outperformance during expansionary liquidity periods. Does accumulating activity from whales change your outlook on ICP? Let us know. Remember, the smart money knows what's going on. Historical patterns. Also, we can look at altcoin BTC chart. Outperformance usually always happens after QT ends. And what happened the other day? QT ended. Each time quantitative tightening has ended in past cycles, altcoin, Bitcoin, Cross has historically outperformed. And it's always found its bottom after quantitative tightening has ended. So think about it. QT effectively ended on December the 1st. And the historical pattern favors capital rotation, increased risk appetite, relative strength in fundamentally strong altcoins. Given ICP's strong usage metrics, analysts see the network as one of the more fundamentally supported assets in this category. We're talking on-chain compute, decentralized AI. Do you think altcoins will outperform BTC in early 2026 in regards to this liquidity rotation? Comment your view below. And 8 trillion in cash, in money market funds, that's a massive future catalyst. With money market funds hoarding over 8 trillion, one's going to expect a large portion of this capital to transition into technological equities, growth assets like ICP, digital infrastructure projects like ICP, utility-driven cryptos like ICP, high throughput L1 systems. ICP is positioned as a decentralized compute layer, which aligns directly with the sectors that typically benefit during easing cycles. Capital, when it rotates in regards to liquidity, always rotates into the most undervalued, best technological, undervalued assets. And also, when we look at the data, weak labor data also accelerates this shift. When we looked at the recent ADP payroll data, it came in sharply below expectations, minus 32,000 jobs versus the expected 10,000 gain. That's the weakest reading since March of 2023. So soft labor conditions increase the probability of earlier rate cuts, extended liquidity support, potential Fed leadership adjustments under new political direction, and even pretty much Trump, when he spoke the other day, like he pretty much mentioned, quote unquote, the next Fed chair indirectly, and that guy's a massive dove. So whoever's going to be in charge of the Fed from May 2026. He's going to have a massive dovish stance. We're going to be talking stimulus, deregulation in the banking sectors. We know they're going to run the economy hot. They're going to run rates below inflation. So, the markets why interpret these developments as inherently supportive for digital assets. Because at the bottom line is the US and the economy cannot afford falling asset prices. Remember, financial stability is everything. And we're talking equities from the backbone of retirement savings. Asset prices influence tax revenues, or what we call tax receipts. Credit conditions hinge on market valuations. With such dependencies, policymakers have limited tolerance for prolonged market declines. And this is why we always have what we call a V-shaped recovery. Therefore, many analysts expect rate cuts, liquidity injections, potential targeted relief, easing measures through 2026, supporting policy shifts. These conditions historically correlate with strong performance across the crypto space and materially high outperformance for the projects that have the best technology and the best real utility, such as internet computer. This is why you need to understand how the convergence of macro drives everything. And having that understanding, gives you the most informed knowledge to obviously make the best informed decisions for yourself, not financial advice. So do you think policy will turn more supportive in 2026? Share your thoughts below. Well, ICP could lead the next phase. ICP enters this environment with several, and I mean several top strategic advantages. We're talking rising adoption, increased whale accumulation, growing developer demand, and with the launch of Caffeine AI, from my point of view, which is going to be launching into its mass adoption phase next year in regards to this increasing business cycle, the AI productivity boom, it could have come at a better time. And scalable compute architecture that ICP offers, strong alignment with real world use cases, like historically attractive valuations relative to network growth, combined then with the macro conditions, the business cycle conditions, with global liquidity expansion. These structural factors position ICP as a potential outperformer during the next macro up cycle in regards to the business cycle. Do you see ICP outperforming other altcoins in 2026? Tell us in the comments. Today's analysis highlights a global financial system undergoing a profound transformation. The Federal Reserve has hit structural limits. Japan's bond market experienced unprecedented repricing. Global liquidity is expanding. That $10,000 move in Bitcoin that happened in under 48 hours was no accident. Money market funds hold record cash reserves. We're talking over 8 trillion. Bitcoin has already responded to the short-term inputs of liquidity into the system. And ICP and other high utility altcoins show record fundamentals despite low prices. Okay, with easing likely in 2026 and also the deregulation, the change in the Federal Reserve, who's going to be someone dovish under Trump's control, capital flows, risk appetite, and digital asset valuations could shift dramatically. Which outcome do you think is most likely going to play out in 2026? And what's your move in 2026? Share your view and your comments below. And if you found this analysis informative, like, subscribe, and share. Because I put a lot of effort in to keep you informed in regards to what's happening in the macrosphere. Because this is what affects and what eventually will move ICP in regards to price. It's all about the macro expectations that move price. And working from traditional finance, that's my background, I know what moves the needle. So drop your thoughts and comments below. Your engagement drives future reports. Stay alert, stay informed, and I will see you on the internet computer. Peace out.